Hi, I'm Mia Burnham with Coldwell Banker in Los Gatos, and I'm here with Eric Nelson of Silicon Valley Capital Funding. And we're here today to talk a little bit about mortgages.
So we talk all the time, Mia, about how to help different clients. And one of the clients that we talk a lot about are self-employed people in this area in particular. So in the Bay Area, a very large percentage of people are self-employed, and they often have issues getting financing.
Yes.
So what we do for those people, I'll talk about how we take care of them from top to bottom.
Okay.
For those people, they often are 1099 employees, where they have a contract of some sort with a company like Google or Yahoo or so forth, and they're just on a contract. They don't have benefits, but they get paid, paycheck to paycheck every single month. We also have people who own their own business, and they offer, all sorts of services, of course. And for the self-employed people that have their own business, they usually file a separate tax return for the business, whether that's a Schedule C or a Schedule C corporation or an S corporation or an LLC or an LLP. Those people all have separate tax returns for themselves and for their business.
Right.
So banks look at both returns. And in today's lending environment, they're now allowing us to look back at their tax return and add back in depreciation and certain expenses. When they do that, if we go through them carefully enough, we can often add back in some of those expenses so they will qualify for more of a loan.
Good. That's good.
Yeah.
And now, is that new?
That is something that's been added or amended in the last couple of years, because I'll tell you, in 2007 and 2008, that wasn't happening.
Right.
And now we're seeing a trend where we're starting to look at self-employed people again a little bit more openly. And so that's an option for them.
Good.
Being
That's
able to
great.
add back some of the expense. So also an option to them in case that doesn't work, and many self-employed people get frustrated because their tax return, they deduct everything.
Right.
Right.
I do.
Want to
We
show,
do.
right? And so they want to get the maximum tax advantage when they do that. But when it comes to a mortgage, that net bottom line can often kill the deal. So we add back the expenses. If it still doesn't work with the expenses, then I will spend time with them on plan B, and that is cash flow. If they have bank statements, personal bank statements, for example, that show good cash flow, money's coming in all the time, and this is often the case for self-employed people. They work really hard, they have consistent money coming in. And so if the personal tax return shows a lot of income, all the deposits are counted as income.
That's wonderful, because
Huge.
they can have a large income every month.
Right.
And it can be counted that way instead
Right.
of the tax returns.
And the other plan is plan C. If their if their cash is all going into a business bank statement, what the banks will allow us to do is use the net remaining cash in the account as their income each month. So if they take in $20,000 and leave $5,000 at the end of the month, I can count that $5,000 as if it's income for them.
Oh, good.
Even if they have zero on the tax return, they'll get $5,000 credit every month as income
That's good.
in that scenario.
So things have changed quite a bit
Right,
for
and that leaves
self-employed people.
that leaves a lot more space for them, as you can imagine. And then, of course, the final plan D, if you will, is for people that don't do any income verification of any sort. We still have a few lending options for them. It's not really a stated income deal anymore. It is required that they have more down payment. It's required that they have a better credit score. There are different other ways to strengthen the deal from a bank perspective and make the risk lower. But if you have more down payment, if your credit's good, you're not going to walk from the house. If you put 30% down or 40%
Right.
down or what have you,
Right.
they're going
It'd
to
be crazy to walk away. Right.
It's just
Absolutely.
too much money to commit and walk,
I know.
right? And so that's really what we try to do for these people. We look at each one of them from top to bottom, and the final thing about all this is we try to figure out what their maximum qualification is. What's the maximum? So, if their tax returns show one number, but the bank statements show a better number, we'll generally use the bank statements.
Right.
And then once I'm done with all that analysis, we bring them back to you, and then you can
And
find
I get them and I find them a house.
Right.
Well, folks, so I think the best thing to do is to call Eric to see if you qualify for a loan if you are self-employed, because things have changed so much.
Absolutely.
Thank you.
All right. That's it for now.